So moving right along, okay, I want to kind of pick these videos up where the last one left off, and that way we cover everything in between, and I'm kind of just giving you a flow, and then I'm going to go ahead and redo all the shorts and videos of the quick how-tos and things like that. I think many of you know that Studio had a facelift in January and everything looks different. So I am redoing these as quickly as I can. So bear with me as I continue to roll them out. What we're looking at is getting your Studio Designer account up and running, right? So I know that they have a new intake process. I have one too that looks, probably a lot a lot different than theirs because we all kind of have our own way of doing things. So that being said, at this point, when you know that you have we've set up the defaults, we've set up a few things here, but primarily we're dealing with something that has zero information in it, right? So at this point, it's the determining factor in this situation is either one, is this a new business that didn't have financials before and we are setting their books up for the first time, or are they an existing business that has financials that we can pull from and continue on where we left off in the old system? Okay. So at that time, I'm going to say in a situation, I'm going to proceed in a situation that this is a new business. Okay. So this is not a conversion. This is a new business with we're setting up for the first time. No books, nothing to convert over. So if you are an existing business with financials to convert over, I am going to ask that you can continue to watch, but I am going to create a video for that full accounting conversion. I'm going to walk through the entire process. I do currently have a video. Hopefully I can put it in the link or have it pop up here. And then that way you can kind of take a look at that process. I mean, the process in theory is going to be the same. It's exactly the same process. The only difference is the fact that it looks different on screen because Studio looks different on screen when you log in than what I had it before when I made the video. Okay, so again, we're going to go ahead and dive into continue on to setting up this company. Okay, so we've confirmed that everything's zero. You can see it here on both sides. This is the balance sheet and this is a P&L or income statement that is interchangeable. They both make up your financial statements, okay? So the first thing usually is kind of figuring out when we funded the account. So if we are going live as of January 1st, I usually like to say, well, was the prior year captured on a tax return, even if it was a loss, even if you didn't earn anything? I like to know, where we start because what you need to understand is, what's contained on these two financial documents is really, it does play in part with your tax return. Okay, so, and in a partnership or a corporation, not an LLC, but this balance sheet is disclosed, so it does always need to tie in. It's cumulative, it doesn't zero out. This right here does matter depending on what time of year it is, because that's going to be, we're going to want to know whether we're capturing for the sake of tax or not. Okay, sometimes we're just trying to get everything in there for starting point. Okay, so we're going to dive right in and talk about funding the business bank account, right? So any monies that would be in here are going to be as a result of client money or money that the owner put into the business to open the bank account or to get everything going, right? I can't, that's usually the only ways that these things are going to make money for the first time, right? So that being said, I'm going to show you how you would get that. If you wanted to just put a starting number and call it a day. Like, you know, yeah, we funded the account last year. Typically, I mimic what happened just to make sure everything is posted correctly, and we don't miss anything. So that being said, I am going to do the beginning balance. Again, this is for a new company, a new business with no books, where am I going? Reconciliation. I want to fund the checking account. We can do it one of two ways. Some people like to post an adjustment. Actually, we could do one of three ways or four. There's many ways to do things. I typically teach a certain way, and there's reasons for why I do things. There's reasons why I do everything, okay? So you can post an adjustment here, clicking the button. You can get these totals here if you know what accounts we're dealing with and what direction it's going to go. You can post it here. I personally don't do this one, and I don't teach to use this one because it makes it permanent. It means you can't change it, okay? And I will go over how to correct it and how to deal with it in mistakes, but I'm not going to go over that here. I'm simply saying, how are we going to fund the account, okay? One, you can post the adjustment. Two, you can do a journal entry here, which is also similar as post the adjustment, right? But they're both permanent. You can do a money in posting and receive the money in from the owner or the client or whomever funded the account, right? But I personally would choose to do the money out option, at least for a while. We're new and learning and working in the system. The reason for that being is that it does make it alterable. It does make it even deletable, okay? And that is why I prefer in the beginning to teach it this way, okay? So that being said, I am going to set up a template, okay? Setting up templates does not auto post anything. It doesn't make it recur every month or anything like that. It's merely a template. It continues to be alterable, but it does give you a way to post or to have a template, okay? So it's kind of like a cute sheet, okay? So I am going to put this in here. So if it was me, I don't think I did. Oh yeah, I did. This is me as the business owner, so I'm gonna just use that. So if you're doing this for your business or you're working for a business, in the setup, I asked that you set yourself up as a vendor. Usually I set up the business owner and the business as a vendor, okay? So I'm in the case that we are not doing a conversion and I'm just going live as of January 1st of 2025, right? I'm not going to, even if it was received maybe last year sometime, if we're not going to go back and capture, which I usually won't, unless I'm paid to do so, then I would go back and capture the year before, okay? But most people don't want to do that. They want to be, doing this as quick and as cheap as possible. That's usually why, most of you or most people opt to do it themselves, which I do want to add, you are fully capable of doing it yourself. But maybe you want to get checked after, okay? I do that, okay? So you can visit my website, www.mareevuitton.com. Okay, hopefully we can flash it on the screen. And I'm going to just go ahead and show you how we're going to dive right in. Okay, so I'm going to do this as a beginning balance. Again, I probably could have done this by journal entry, and if it was me doing the setup, I probably would. But when I'm teaching it, I don't want to do that. Okay, and I am going to show you why in just a moment, because I am going to post it all three ways so you can see the differences. I think that that's actually, I'm not going to do it all. I'm not going to do it all three ways, but I am going to just fund it the way that I want to teach it here. So I might do fund Oh no, I'm going to say post beginning balance at 1/1/25. Okay, so I might just do something like that. And in through here, I will do, I'll post it to capital contribution. And I will put it for whatever that beginning balance is. In this case, let's just make it easy and do an even 10,000, or let's make it smaller, 5. Okay. I did hit the recurring button. Okay. And I'm just going to show you, we're not jobbing it. We're not doing anything else. Okay. It's really basic. Okay. And I'll show you why. Okay. And you can see here, whoops, this meant to do it the opposite direction because this is a money out that I'm doing it in a reverse. So it technically is a money in. Got that? You don't have to understand, but just go with me here for a second. So I'm going to go ahead and post it. You can see that it's red and I posted it. I'm not teaching necessarily how to post just yet. This is just to get that beginning balance in there. Okay, and I want to show you now, when we go to the reconciliation, it now is in there to select it. If we were to pull up the financials, and I am now, you can see the entries that are involved to make this appear. Okay, and you can still see if it is counted as income. Okay, we're basically saying, whatever was captured prior year or whatever happened, basically we're funding the account and it's not affecting our income at this time. Okay, we just put the money in the account. I will show you the income statement because I know not everybody knows how that works, but it does not affect income at all. Okay. Here is your income. This is not affected, and there's your balance sheet. So there's 5,000 in the Chase checking account. If there are any questions on what I've just done, you can let me know in the comments, but typically what I would do in this setup, if we were talking about just getting in the beginning balances in there from the prior year, I probably still would reconcile that. I might post it as 12/31. Okay, or if you want to go live on this date and not have anything in there at 12/31, that's fine too. I usually would have posted that probably at 12/31. Okay, but that's because I would have done a reconciliation to get the beginning balance in there, so that way when we go to do the first January reconciliation, it would have been in there already. Okay, but I mean, it's fine. It could be 0 and it could just start here. Okay, and that is basically how you get it in there. Let me show you the coding. I just clicked the little pencil. That is typically how you edit anything in Studio. If you see that pencil, usually that's what that means. Okay, if I wanted to change the coding, and let's just say for whatever reason it was, I don't know, insurance refund or something like that we got, I could change it. I could just go in there with the edit button and I can change the account. Okay, and you can't always do this to every kind of transaction. Okay, and that might irk you if you're the accountant. It usually does irk accountants. Okay, but there are a lot of security measures that are in place in Studio that are set up for the protection of the business owner / interior designer. Okay, so if I wanted to change that into like an insurance refund for some reason, and I'll explain that. Oh, it could be like, auto refund or whatever, general, if I didn't know. Okay, now that would affect the balance or the income for the year, because now we're talking about an insurance refund. So, yeah, it would be, now there would be a negative expense is really income. Okay, and I can show you that. Okay. So you can see it's a negative expense, means it's income. And now the net profit is at 5,000 as of now, right? Because I just reclassed that. But that's usually not going to be the case. I just wanted to show you that it was alterable, and now I am going to put it back because I don't want it there. So I'm going to move it back to not an insurance refund, and I'm just going to put it's the beginning balance. When it's unaccounted for, we just attribute it to from and to the owner. Okay, so that is how we would fund the business account. You saw that the financials just read like this. We don't have any income. We do have 5,000 in our Chase checking. We haven't spent anything on the credit cards or done anything else at this point. Okay, and this would be how we would kind of get the books going in a new business. Okay. An existing business is going to follow the accounting conversion protocol. And again, I have a video for that as well. I have it on the old software, but I'm currently creating the one for 2025. Okay, hope that helps. Leave me your questions, comments, and feedback in the comments below. And stay tuned for the next video in this series. Thanks.